Welcome to the XFO Intelligence Podcast and to our Legendary Investors series. Today, we're going to re-engineer the formula behind a name that's, synonymous with institutional genius, David Swensen. When David Swensen passed away in 2021, after 36 years as Yale's chief investment officer, the financial world, it really mourned a brilliant mind. But to focus only on those headline numbers, growing Yale's endowment from, $1 billion to over $40 billion, achieving that stunning 12% average annual return, that's like admiring the blueprint and completely ignoring the building. See, Swensen's true masterpiece, it wasn't a portfolio. It was a living, breathing organization, a machine really, engineered for generational wealth, and one that continues to thrive long after its architect has gone. Most discussions about Swensen, they kind of stop at the Yale Model, that famous heavy allocation to private equity, real estate, and hedge funds. But that's just the visible tip of the iceberg. Swensen didn't just create an investment strategy. Emphatic, he designed an enduring institution. So how did he build this machine? Well, it all began with the foundation. A really deep understanding of Yale's unique and, frankly, uncopyable advantages. First, he embraced the permanent capital advantage. Unlike a pension fund or a private investor, Yale's endowment, it has no expiration date. This gave Swensen an almost unfair edge. He could just ignore the market's daily hysteria. While others were forced to sell during a crisis, Yale could buy. As Swensen himself often said, this isn't my money. It's the money of future generations of students and scholars who haven't even been born yet. That perspective, it really changes everything. Second, he leveraged the academic ecosystem. He wasn't on Wall Street, he was in a university. He hired PhDs and academics who could perform deep, rigorous analysis rather than just reacting to market noise. He built this culture where, evidence trumped opinion, and patience was prized over speed. And then, perhaps most radical of all, he insisted on mission alignment over benchmark performance. The endowment's job wasn't to beat the S&P 500. Its job was to fund education, research, and scholarship forever. This freed him from the tyranny of short-term performance anxiety and allowed him to build a portfolio for Yale's needs, not Wall Street's expectations. So, on this powerful foundation, he then installed this really disciplined operating system for decision-making. The first principle was the forever outlook. This wasn't just a long-time horizon. It was a fundamental mindset. Storytelling. When the world was melting down in the 2008 financial crisis, Swensen saw opportunity. This wasn't bravery. It was the logical output of a system designed for permanence. He understood that illiquid assets like private equity and real estate offered higher returns precisely because they required patience. Yale could afford to be patient and collect this illiquidity premium. Next was evidence over emotion. His office conducted these thorough post-mortem analyses after major market events, not to assign blame, but to learn and improve. When selecting outside fund managers, he famously ignored recent hot streaks. Instead, he looked for a sound process, organizational stability, and, this is huge, managers who invested their own money right alongside Yale's. And finally, his system was contrarian by design. He systematically identified and exploited inefficiencies created by other investors' limitations. Engaging. When everyone was euphoric about tech stocks in 1999, Swensen reduced Yale's exposure. When real estate prices collapsed in 2008, he became a buyer. But look, a brilliant system is nothing without an organization built to last, right? Swensen's third layer was the architecture of an enduring institution. He created a self-reinforcing excellence flywheel. Strong performance enhanced Yale's reputation. Building momentum, this attracted the world's best investment managers, who offered Yale favorable terms. Those better terms improved returns, which further enhanced the reputation. The flywheel just spun faster and faster. He also engineered the organization to see crisis as opportunity. The 2008 crisis is the ultimate proof. While other institutions were panicking and selling, Yale was methodically deploying capital into distressed assets at bargain prices. This wasn't an opportunistic gamble, though. It was premeditated. The whole system was built with liquidity buffers and trusted partnerships, ready to act when others were frozen by fear. And he treated knowledge as a competitive advantage. He documented everything meticulously, building an institutional memory that would survive any single person. He even shared his knowledge freely, writing the book Pioneering Portfolio Management, a book that, it became the Bible for an entire industry. So, if we decode all this, what is the formula? It's a set of 5 constants maintained for over 3 decades. A 75% allocation to illiquid assets, 25% of capital with the top quartile of managers, a 20% liquidity buffer for crises and opportunities, roughly 1 advanced degree researcher for every $1.5 billion managed, and a 100-year time orientation for every single decision. So why then do so many who try to copy the Yale model fail? Because they copy the asset allocation but miss the underlying architecture. They have a time horizon deficit, they lack Yale's permanent capital, they have a capability gap, they haven't invested in the world-class talent and patient governance, and they suffer from mission misalignment. They're beholden to quarterly returns, not a generational purpose. David Swensen's greatest achievement wasn't a number in a ledger. It was building an institution that would outlive him. He proved that the highest form of leadership isn't making brilliant decisions yourself. It's creating the conditions where the right decisions emerge naturally from the system you built. That is the living legacy of David Swensen, a blueprint for enduring excellence. If you found this analysis valuable, we invite you to like, share, and subscribe to the XFO Intelligence Podcast. Your support helps us continue to deconstruct the formulas behind legendary performance. Now, here's a question we'd like you to think about. If you were to design a system for your own goals, be it for your family, your business, or your investments, what would be your permanent advantage, and how would you build around it? A brief disclaimer before we close. The content in this podcast is for informational and educational purposes only. It should not be construed as investment, legal, financial, or tax advice. All investment strategies involve risk, and past performance is not indicative of future results.